What's up, everybody? Welcome back to the Life of a Car Guy podcast. I'm your host, Pete the Car Guy. Appreciate you guys joining me on this beautiful Saturday. Thank you again for coming on back. I've got a whole lot to talk about, a whole lot to share. So let's go ahead and kick this thing off. And you know how we do. We started off with the What's Going On segment. Talk to me so you can see. Oh, what's going on? What's going on? What's going on? What's going on? All right, so we've been talking a lot about the next Take the Wheel segment, and I'm ready to introduce that guest that's going to be on there. His name is Mr. Sean Hicks. Mr. Hicks comes from the South Boston area, and he has been a part of the car business for the better part of about 35 plus years, going on 40 years now. He's been in various dealerships going all the way back to Dallas, Texas, up through the South Boston area, and even here in the Central Virginia area here in Richmond. He's been a sales consultant, a finance manager, a sales manager, and even ran a store as a general sales manager. So I'm looking forward to talking with him one-on-one. And he's been an integral part of my life as well, because he's the one that introduced me to the car business. So I'm looking forward to getting that interview in and exploring that with you guys as well. Can't wait for that to happen. Looks like we're going to do that this coming week. So be on the lookout for that, and can't wait to drop that for you as well. All right. And as usual, guys, the blogs are still going up on the lifeofacarguy.com webpage. So continue to check those out and read those and like and read comments. Okay. Appreciate you very much on that. Now, in the streets news, I cannot wait to share this one. This is another little nugget. It's basically, we're going to bring the old thing back again this time around. So, Automotive News has reported that the Chevy Camaro is going to make a comeback. Yes. Looking forward to that. Looking forward to that. So the Chevy Camaro has been launched and relaunched a couple of times, and now it's going through its third relaunch. And I believe it's going to drop probably in 2027. So I don't know if you guys were aware, the last Camaro came across the assembly line in Detroit back on December 13th in 2023. That was the last time that the last newest Camaro was produced. So GM actually filed another trademark setup for the Camaro in late 2025, and they're in the process of reproducing the Camaro in their Lansing, Michigan division, where they're also constructing the CT4 Cadillac and the CT5 Cadillac. Now, what's going to happen with this is that they're also going to reintroduce a four-door sedan through the Buick line, as well as the Camaro in the same assembly plant. Now, what makes this integral is that GM is now focused on what they call an Alpha 2 platform. And what that is a new commitment, or a renewed commitment, if you will, to the rear wheel drive platform. So that's basically what the Alpha 2 represents for GM. So we're going to start seeing vehicles made with rear wheel drive now. That's been something that's happened, back years ago. Then it went to more of a front wheel drive and all wheel drive. So now there's a renewed interest and a renewed dedication to bring back the rear wheel drive. So we'll see how that goes. In my personal and professional opinion, I think that's a great idea. One of the things I've learned about in the automotive industry is that when you take away options from individuals, you kind of limit the overall pool of what people can choose from. And I can tell you, Ford and Nissan has really benefited from the removal of the Camaro from these affordable sports car segment, because there's been a renewed interest in the Ford Mustang. And of course, Nissan has redrafted the Z, which is a really nice segment at sports car as well. So I'm glad they're bringing it back. I'm also glad that they're reintroducing a sedan. Part of that was a kind of like a shifted focus to electric vehicles and more of an SUV offering platform across the board. And this wasn't just GM. This has been a lot across the board on a lot of different manufacturers. And you've seen a really shift, a big shift to the discontinuation of sedans as well. So I'm glad they're doing that to kind of give people more options and kind of reintroduce them back to things that we've had before. So I'm definitely looking forward to that, and we'll see how that goes and what that brings. Okay. Now, the major topic of discussion for today, and this is going to be topic two of the five topic segment for the Car Guys car buying process. The second topic of today is going to be pre finance. Now, why do I say pre finance in this case? Let me tell you, the main thing is that when we talk about pre or anything, that means kind of getting geared up and getting set up. One of the things that I've learned in the automotive industry, especially on the car sales sides of it, is that it's better to be prepared and know what your financial position is prior to walking through the dealership door. Now, why is that important? Because it kind of puts control in the consumer's hands, and it kind of lets them know what they're able to do and what they're not able to do. Okay. And there's nothing wrong with being as prepared as possible given the nature of certain circumstances. So, one of the things that I want to kind of talk about within this segment are four different categories: cash or asset resource review, credit, financing options, and this is a big one for a lot of my clients, is kind of knowing the difference between what an approval is versus a pre-approval. That one's really big, and we're kind of go into a little bit more detail with that. All right. Now, when we're searching for new vehicles, right? Some of us are kind of in a position where we have time to kind of look and find a replacement vehicle with various situations. Like we have an older vehicle that's getting up in age, and we're starting to see a more consistent process with like a lot of mechanic and electronic issues that show up, or a vehicle that's getting up in age and up in mileage. So when we see that, and that typically depends on the vehicle, but typically can happen when you get over 100, 150,000 miles. That's normally a decent time frame to start kind of considering other vehicles or newer vehicles to replace the one that you currently have. Obviously, there are a lot of exceptions to the rule. I've seen a lot of vehicles that go well over 200,000 miles. I've seen plenty of them that have gone over well over 300,000 miles. So it really depends. But typically, a good rule of thumb is around the 150 range in terms of your odometer reading. It's a great time to kind of start considering what other options are out there to replace your current vehicle, just on the event that it may be a major breakdown or a major cost to get something fixed or done, right? So, it's always a great idea to start putting money away for a down payment, or if you're able to, kind of put money away to buy a whole new car if you can. All right. Obviously, cash is king, right? And it's better to do it that way than to finance and not have to worry about monthly payments and things like that. Now, not all of us are able to do that, so that's no problem. So if you find yourself in a position where you're needing to finance a vehicle, that's okay too. But it's a good idea to have a plan in place and know if and when you can, to know what you're able to pay for and what you're able to afford. Okay. And that's going to go on a case by case basis. So if you're in a position where you're able to start saving and start assessing before something happens to your vehicle, go ahead and get started early. The earlier you do it, the better you are prepared if and when something happens. Okay. Now, there's another thing that I kind of want to talk about, and it's a funny story. My dad used to have a saying, and I'm sure all of you have heard this. It's called "Don't keep up with the Joneses." Now, that's a kind of a weird phrase or a slogan about trying to do things that are outside of our means, our financial means, right? So, when we're doing those kinds of things, we kind of put ourselves in a detriment or in a situation where we're financially strapped or less able to do certain things that we want to do or able to do or need to do financially. So, when you come across a situation, just have a clear understanding of what you can afford and do your best to kind of stay within that. The last thing you want to do is to put yourself in a situation where you're financially strapped every month and, you're kind of one catastrophe away from an impending financial burden. Okay. Now, when we talk about credit and situations like that, and especially dealing with certain things that are sudden. So, kind of give you an example, and I know I've been in this situation. I had a vehicle that was running fine, everything was good, and I was involved in an accident. And in a split second, I'm back on the car buying market looking for a vehicle. Now, I think a lot of us have experienced that in our lives and kind of been in a situation where we have kind of been put in a position where we're in need of a car and weren't prepared for it. Number one thing I want you to do is to not panic. Okay. Do not do that. As best you can, just understand that's a part of life. Certain things come up, things happen, and they're kind of outside of our control. The important thing is to remain calm and focus on the things that you can control. And first off, get an idea of where you stand financially. Okay. Now, if your vehicle is fixable or is able to be fixed, definitely keep that as an avenue. And please understand the level of which the repair is going to be versus where you are financially and if it's worth keeping or worth just kind of moving on from. Okay. So definitely make sure you assess that. And if you have trouble doing that on your own, please talk to someone that you're comfortable with, someone who is savvy with finances, or you can always reach out to the car guy if you have any questions. Okay. But let's say, for example, you already know that your vehicle is a total loss or is too far gone to try to repair or fix, and you need to kind of go back to the drawing board and find a new car. So, very first thing I would tell you to do is get an understanding of where you are financially. And then also, number two, understand where you are with your credit. Okay. Now, a lot of us, especially with the way things are now, we're very, very attuned to credit monitoring and identity theft protection. That's just kind of the world that we're living in now, unfortunately. But there are a lot of us that may not be aware of that and aren't really sure where to even start. So, hey, that's what we're here for today, right? So, I'm going to go over a couple of resources and I'm going to also highlight a credit hack that I discovered only in the past couple of weeks myself. So, a great place to start if you've never pulled your credit report is to go to annualcreditreport.com or freecreditreport.com. It is an independent site that is available to anyone and everyone to pull a credit report for themselves and to get an idea of where their credit stands. Okay. Now, there are some ways that you can pull your credit based on your area or your region where you live. And there are three main credit bureaus to try to understand, to get introduced to, and understand where they lie. So for the eastern side of the country, the credit bureau that's mostly focused for like the Atlantic coast and up through certain parts of the east is Equifax. Okay, the one that's kind of in the middle of the country, more focused centered, is Experian, and then the one that's kind of focused on the west coast is TransUnion. Okay, so these are the three main credit bureaus that are out there to kind of understand where you stand credit wise. Okay. Now, one of the things that I kind of discovered recently that was really, really cool. I know you guys have seen commercials on Experian and like the Boost. And I think John Cena was a big proponent. Their celebrity host or their celebrity influence to kind of put that out there. Experian does offer a free credit access where you can go on, download the app or go online and create a free account. And you can kind of see what your experience score is. So I've had that for a while and I've kind of been keeping up with that with my own credit use and my own credit building. But one of the things I was thinking about is, what if Equifax and TransUnion may have the same thing? And I actually found out that they do. So what I did was I downloaded the apps for Experian, Equifax, and TransUnion, and I created a free account for each of those. And now what I have is I have a free access to all three of the bureaus so that I can see what my credit score is at any time that I want. Now, one caveat with that is that you do have to create accounts for all three of those apps. but they don't cost you anything. They're free. And you get free monitoring for anything that comes on any one of the three bureaus, which is really, really cool. Now, you may have to stomach getting a lot of notifications throughout the day from each of them. But one of the things that I've noticed, I think Experian was the only one that I kind of get at least 3 or 4 notifications on a daily basis. Equifax, I don't really get too many notifications. TransUnion, I might see maybe 3 a week. So they really don't inundate you with a whole lot of emails and notifications, but it's really, really cool to do that. So I would recommend, if you haven't already done that, download those 3 apps. If you want to go to your app store, if you're an Apple user, iPhone user, you can download them there. Or if you're an Android user, you can do the same thing. Create your free accounts for each of those bureaus, and you can have your own personal tracking system for all three. Okay. Now, you can also, one of the things that I've noticed is you can pull to see your accounts on each of the bureaus too, which is really cool. So I don't know how long that's going to last, but I can tell you, if you get set up with it really quick, you get to see all three of your bureaus. So definitely check that out. Now, when we talk about financing options, okay, there are three different sources for that, in my personal opinion and professional opinion. If you have a bank account and you get direct deposit, and if you have savings or whatever, most of the time your local banks or your national banks that you're associated with may have financing options for automobiles. Okay. Most of the large banks out here, like Bank of America, Capital One, Ally, Chase, Truist, all of those guys should have options for financing an automobile. So if you are members of those options, definitely check that out and see what is available to you. Another really good source, especially in our area here in the Central Virginia area, are credit unions. Now, the difference between credit unions and the national banks is that credit unions aren't owned by shareholders, they're owned by the members. So, a lot of times you'll get more benefits and a little bit more flexibility for financing options if you are a member of a credit union. Now, to be a member of a credit union, typically you have to join at the base level by opening up a membership savings account. That typically is the case with most credit unions. But I would, if you are an affiliate with a credit union or you have one in your area, check them out and look at the details on how to become a member. Now, typically, when you open up a membership savings, it'll just cost you typically like $5 to do that, and then you're a member. And then from there, you can kind of go in and talk to a membership representative and talk to them about your financing options and kind of see where you stand credit wise as well. Great resource. One other one, obviously, is the dealer incentives and the dealer options for financing. Now, a lot of times people are a little leery about that because they're concerned about their credit being run and things like that. As well, you should be. Before you consent to any kind of credit run or credit application, have a clear understanding of who they send their information to. Now, there are some dealers that have a primary source that they use. So if you go to like a Toyota dealer or a Nissan dealer or a Honda dealer, they have their own financing for their respective manufacturer levels. So like Honda Financial, Nissan Motor Finance, and then Toyota Financial Services, respectively, right? So if they're using those primarily, and you are able to make sure that they're only running on those resources for that one credit pool, just make sure that they do that and make sure you're comfortable with it before you give consent. Okay. Now, couple of things about your financing options and what kind of levels they fall in. So there are two main levels, and they include prime lending and subprime lending. So prime lending are those financial resources that give decent credit options with respect to really good rates based on your credit profile. And typically, if you have a very strong credit profile and you've not had any 30-day lates or any kind of credit issues, you're going to be a prime lender applicant. Okay, which means those places that I mentioned, like the dealer options, the high dealer options that give the lower credit approvals, those are the ones that you're going to be approved for. And then there are some of us that deal with what we call subprime prime lending. And those are banks that deal with like second chance financing options where interest rates and terms and conditions may be a little bit higher and may cost a little bit more. Now, there's nothing wrong with subprime lending, in my honest opinion. Okay, especially if they're giving options to individuals that don't get approved for prime lending. But have a clear understanding of where that is for you and have a clear plan for making sure you pay the loan off and you're not paying 2 to 3 to 4 times the value of your car. Okay. And that typically happens, especially if credit worthiness isn't as strong, or you may have had some previous credit issues or credit problems that have caused you to kind of score much lower on your credit reports and for financing options. Okay. So that's why I always say, it's a good idea to have a clear understanding of where you stand and what you can be approved for, where applicable for you. Okay. So that's a kind of a rundown on the financing options. The last thing, we kind of need to break down the difference between an approval and a pre approval. Okay. So an approval specifically is a 100% confirmed description of what you are financed for a specified vehicle. Okay. Now, let me make sure I make this very clear. When you go into a dealer, okay, or you go into a credit union and you have signed applications and documents to receive a loan and you have finalized the loan, whether at the dealer level or the bank or the credit union, that is what's called an actual approval. And that's based on a specified collateral, typically meaning the vehicle you're purchasing, and it specifies the exact interest rate, your exact payment, and the exact due date of your first payment. Okay. So that is a hardcore approval. Okay. Now, a pre-approval is not an approval. And let me tell you why. Give you an example. Let's say you bank with Capital One. Capital One has what's called a Capital One Auto Navigator. And the Auto Navigator function that Capital One uses kind of gives you stipulations based on what you could be approved for prior to going into a location or prior to choosing a specific vehicle. And typically, they'll give you a range of options. They may tell you a certain amount that you're approved up to or pre approved up to based on a range of rates. Now, the difference between this is that number one, you have not specified a specific vehicle, you have not specified an exact monthly payment or interest rate, and a specified date of initial payment due. Okay. So those are the four things you want to make sure that you have in place before you know you have a consistent approval. The other thing that's very important about a pre-approval is that it doesn't always mean that you will be 100% approved, especially on the vehicle that you're looking at. Now, I've had situations in my 20 plus years of selling cars and financing cars where people have come in and said, well, I've been approved with XYZ. And when it turns out is that they're not approved because they haven't specified the car and the vehicle that they're looking at may or may not meet the terms and conditions of that pre-approval. So there are three things typically that the approval must go through to confirm what that's going to be. Number one, if you've never heard of this term, it's called loan to value. What that basically means is that the vehicle that you're purchasing, based on the final dollar amount, including money down and add ons, must meet a particular percentage to stay within the loan to value. Okay. So, what I mean by this is let's say your bank is going to say you have an approval up to 115% of the loan to value of the vehicle. Now, the loan amount versus the value of the vehicle must be within a certain percentage range. If it isn't, and if it's outside of that, then that means that the applicant, namely us, who's buying the car, must put down money or cover the difference to be within that amount in order to get the approval from the bank. Okay. So a lot of times the banks will give stipulations and requirements that you have to stay within a certain year range threshold of a vehicle, stay within a certain price range, as well as a certain mileage. Okay. Believe it or not, mileage on a vehicle, especially a pre owned vehicle, does make a difference in the type of approval you can get and can alter not only your monthly payments and interest rates, but whether or not you even get approved for that specified vehicle. Okay. And with that, a lot of times what we're not also aware of is that, let's say we're trading in a vehicle that may be broken down or may have some issues. If you have a loan on that vehicle and it's not paid off and you're trying to trade it in, you could potentially be in a situation where we call negative equity. Now, negative equity, what that basically means is you owe more on the vehicle than what the vehicle is worth. So, for example, you take it into the dealer. The dealer does trade ins, they give you numbers on your vehicle as a proposed trade in. Let's say you owe $10,000 on your bank note for your particular vehicle you want to trade in. The dealer does a trade-in evaluation, and they come back with $5,000. Now, I've had customers assume that that $5,000 goes towards them. That's not the case. If the vehicle loan value is more than what the value of the vehicle is, then that's what's called negative equity. So in this example, if your vehicle's worth 5,000, you owe 10,000. That means you have a negative 5,000 that you're adding to a potentially new loan. Typically, with negative equity, that can change your approval. It can make the interest rates higher. It can make the requirements that are needed go up. And sometimes it will overall affect the deal to the point where you're not able to purchase a vehicle. So it's always a good idea to know where you stand if you have a vehicle that you don't own outright. Now, obviously, if you have the title to the vehicle, you own it outright, you are not making any more payments, you pay the vehicle off, and you get assessed a value, that's considered positive equity, meaning whatever that value of that vehicle is, you can use that as down payment towards the next vehicle. So, same example, your vehicle's assessed at $5,000, but you own the vehicle and you have the title. That means you have $5,000 of down payment that can go towards your new vehicle. Make sense? Cool. So, one last thing to just kind of touch on with respect to this. Um, in a lot of circumstances, we find ourselves in positions where we are looking for a particular vehicle, but we may not be able to afford the one that we want. Sometimes we have to kind of assess where we are and get an understanding of what we need versus what we want. There's no shame in that. Okay. I can tell you some stories about myself. There were times where I couldn't afford a vehicle, and I had to have people, take me from work to home, and then from home to work. That's happened a couple of times in my earlier life. Uh, you know, and there were times where I had to kind of get the vehicle that I needed right then before I was able to get the vehicle that I wanted. And to be honest with you guys, you're not missing out on anything. You really aren't. So even though sometimes we may not get what we want, that's okay. That's why it's important to plan out and to put ourselves in a position for the next time around to get what we want and to be able to afford it. Okay? Those are all very important attributes for that. All right, guys. So that's pretty much it for the pre-finance segment. If you all have any questions on that or you'd like to discuss that in a little bit more detail, definitely reach back out to me. This is a great lead into the Drop a Dime segment. You can leave me an email at thelifeofacarguy@gmail.com. Okay. More than happy to answer questions on that or kind of give you specific details if you like. Okay. Now, a couple of announcements just to kind of go over with you real quick. We talked about the Take the Wheel segment, and that's coming up. We're going to do two this month. just so you'll know, the third Take the Wheel segment I want to set up for the end of April. I kind of mentioned that on the last podcast, but just kind of want to reiterate that one more time. And also, just to kind of let you know, we're going to have some apparel come out real soon with the Life of the Car Guy logos and information. So I can't wait to share that with you. All right, guys. So we're going to sign off. Homework assignment, same thing as we always do. Tell 5 people about the podcast and the website and the blog, and have them sign up and subscribe as well. And we greatly appreciate it. And it's always important to kind of share this thing of ours. And this thing of ours here is something that we can all share in and kind of participate in. All right, guys. So I'm gonna go ahead and say, have a great weekend. Appreciate you riding with me. Want to say praise God, because without Him, wouldn't be able to do anything, and He's always got the wheel. And though we may not always agree, it's always important to show respect. Stay up, and I'll see you out on the road.